are a digital asset investor with crypto activity spanning many years, many platforms, or someone that just has incomplete records, this video is for you. What I want to discuss today is historical accounting and cost basis reconstruction and what this process really entails. So crypto cost basis reconstruction is a process of rebuilding your digital asset transaction history at the tax lot level in order to calculate not only your gains and losses and income for each applicable tax year, but to calculate your cost basis for all of those tax years. And this is one of the most important reasons why investors are still going back 5, 10 plus years to do this historical accounting and cost basis reconstruction process. Not only do they need to have their taxes accurately calculated, but just as importantly, sometimes more importantly, they need to have their cost basis accurate because this will follow them into future tax years. So this is becoming increasingly important for taxpayers as the transactions for digital assets become increasingly visible to tax agencies via Form 1099-DA and other third-party reporting that is being implemented for digital assets. So let's go over a bit on, why people are in this position. Digital asset compliance has been historically very low across the board of digital asset investors. And, this is partially ideology based, but partially just based off of the circumstances of digital assets. We are talking about somewhere, industry where we have fragmented wallet usage, multiple exchanges that people are trading on, protocol level complexity when it comes to both data and tax characterization. And overall, there's been no consistency across all of these data sources in data formatting, and there's been no consistent record retention from most taxpayers. So, most taxpayers have, again, been non-compliant. Some have been filing. Most have not been keeping sound records with defensible audit trails, slot level cost basis reports, and something that can really stand up for scrutiny. So why is this so important, and where do the issues come in? It really comes down to the cost basis, because if you don't do your calculation for a year, of course you have issues for that tax year. You're non-compliant, potentially you're maybe underreporting, but at least that's isolated to that specific tax year, as bad as it may be. When we get into the cost basis considerations for your digital assets, this is something that can follow you into future years, because tracking your cost basis is a cumulative process. So what that means is if you purchased Bitcoin or Ethereum 10 years ago, and then, since that initial purchase, you've been maybe accumulating more of it, maybe sometimes selling it, moving it around to different wallets. All of these movements need to be tracked, and they're all going to cumulatively impact your current cost basis of the Bitcoin you're still holding today. So when you calculate your basis for the year 2025, at the end of that 2025 year, the ending basis is the beginning basis for 2026. So you always have to pick up where you started. So if your cost basis is inaccurate for 1 year and you start your calculation based off of that inaccurate data, it's likely to be inaccurate as you move forward to future years. For as long as you hold these assets with this inaccurate basis, you're going to have these inaccuracies baked into your portfolio. And when you go to dispose of those assets, you're going to have these reconciliation issues. So these cost basis errors can follow you around and haunt you for as long as you hold these assets. So what does cost basis reconstruction mean? This is a systematic rebuilding of your digital asset ledger at the tax lot level. We start with your earliest transaction, and we do the